Have you ever wondered how some of the most powerful people in history were brought down not by wars or revolutions, but by something as mundane as unpaid taxes? What if I told you that Al Capone, one of America's most notorious gangsters, wasn't taken down by his countless murders or illegal operations, but by a simple tax evasion charge? Today, we're diving deep into the shadowy world of historical tax scandals that shaped nations, toppled empires, and revealed the true power of the taxman. Welcome to a journey through time where we'll uncover 10 of the most jaw-dropping tax adventures that prove one timeless truth. You can run from many things, but you can't hide from the tax collector forever. From ancient Rome to modern America, these stories will change how you think about taxes and show you why even the mightiest figures in history trembled at the thought of an audit. Let's start with perhaps the most famous tax scandal in American history. Al Capone controlled Chicago during Prohibition, running bootlegging operations worth millions. The FBI couldn't touch him for murder, extortion, or racketeering because witnesses mysteriously disappeared. But Treasury agent Frank Wilson discovered something fascinating. Capone was living far beyond any legitimate income he could claim. While federal agents struggled to prove his violent crimes, Wilson meticulously traced Capone's unreported income through luxury purchases, property acquisitions, and lifestyle expenses. The government's case was brilliantly simple. They didn't need to prove Capone sold illegal alcohol or ordered hits. They only needed to show he had income he didn't report. In 1931, Capone was convicted on 5 counts of tax evasion and sentenced to 11 years in federal prison. The man who seemed untouchable was brought down by basic accounting principles. This case established a crucial precedent. Organized crime figures could be prosecuted through their financial dealings when other charges couldn't stick. But Capone's story pales compared to what happened in ancient Rome. The Roman Empire's tax system was notoriously corrupt, but one scandal stands out for its sheer audacity. During the 1st century, tax farming was the primary collection method. Wealthy individuals would bid for the right to collect taxes in specific regions, paying the government up front and keeping whatever they could extract beyond that amount. Marcus Crassus, one of Rome's richest citizens, discovered a particularly clever scheme. He would deliberately underbid for tax farming contracts in certain provinces, appearing to offer the government a good deal. However, he had secret arrangements with local officials to drastically underassess property values and population counts. This allowed him to collect far more than his conservative bids suggested, while appearing patriotic and generous to the Roman Senate. Crassus accumulated wealth that would be worth billions in today's currency through this systematic tax manipulation. His scheme only came to light after his death, when investigators discovered detailed records showing the true extent of his operations. The scandal contributed to major reforms in Roman tax collection and highlighted how tax systems could be weaponized by those with enough resources and connections. Moving forward in time, we encounter one of history's most expensive tax revolts. The Boston Tea Party wasn't just about tea. It was about taxation without representation. But here's what most people don't know. The actual tax on tea was relatively small. The real issue was the precedent it set and the monopolistic advantages it gave to the British East India Company. The Tea Act of 1773 didn't actually increase tea taxes. Instead, it allowed the East India Company to sell directly to retailers, bypassing colonial merchants who had been making substantial profits as middlemen. These merchants faced financial ruin, not from high taxes, but from being cut out of the supply chain entirely. The tax became a symbol of broader economic control and political oppression. When colonists dumped 342 chests of tea into Boston Harbor, They destroyed property worth approximately $1 million in today's money. The British government's response, including the Intolerable Acts, escalated tensions that ultimately led to the American Revolution. A tax dispute that began as a business regulation issue evolved into a war that cost both sides enormous resources and fundamentally changed world history. Perhaps no tax scandal has had more lasting cultural impact than Lady Godiva's legendary ride through Coventry. While historians debate whether this actually happened, the story reveals important truths about medieval tax resistance. According to legend, Leofric, Earl of Mercia, imposed crushing taxes on Coventry's residents. His wife, Lady Godiva, repeatedly pleaded with him to reduce the burden on their subjects. Leofric finally agreed, but only if Godiva would ride naked through the town streets. Accepting this humiliating challenge, she asked townspeople to remain indoors and close their shutters out of respect. The story says everyone complied except for one person, later called Peeping Tom, who was struck blind for his voyeurism. Whether factual or mythological, this tale illustrates the extreme measures people were willing to take to protest unfair taxation. It also demonstrates how tax policy affected entire communities and how personal sacrifice could be used to highlight governmental overreach. The story has endured for nearly 1,000 years, proving that tax-related narratives can capture public imagination in powerful ways. Fast forward to the French Revolution, where tax inequality played a crucial role in toppling one of Europe's most powerful monarchies. France's tax system was incredibly unjust, with the wealthy First and Second Estates largely exempt from major taxes, while the Third Estate, comprising roughly 98% of the population, bore the heaviest burden. The clergy and nobility enjoyed numerous tax exemptions, while peasants, artisans, and the emerging middle class paid increasingly heavy levies. This system became unsustainable as France's national debt grew from expensive wars and lavish court spending. When Jacques Necker, the finance minister, published a report revealing the true extent of government finances and tax inequities, public outrage reached a boiling point. The financial crisis forced King Louis XVI to convene the Estates General for the first time since 1614. The Third Estate's demands for tax reform and political representation ultimately led to the Revolution, which completely transformed French society and inspired democratic movements worldwide. What began as a tax dispute evolved into a complete restructuring of political power and social hierarchy. Moving into more recent history, we encounter the Watergate scandal's lesser-known tax dimension. While most people remember Watergate for political espionage and presidential resignation, tax fraud charges played a significant role in bringing down key figures. Several of President Nixon's associates were investigated for tax evasion related to campaign contributions and slush funds. Spiro Agnew, Nixon's vice president, resigned after being charged with tax evasion related to bribes he received as Maryland's governor. The Internal Revenue Service discovered that Agnew had failed to report substantial payments from contractors seeking government work. His resignation came before Nixon's own downfall, demonstrating how tax investigations often uncover broader patterns of corruption. The Watergate tax investigations established important precedents about campaign finance and political corruption. They showed how financial misconduct often accompanies other forms of governmental abuse and highlighted the IRS's role in maintaining political accountability. One of the most bizarre tax scandals involves the Roman Emperor Caligula, who imposed taxes on everything imaginable to fund his extravagant lifestyle. Caligula taxed lawsuits, marriages, divorces, and even prostitution. He forced citizens to pay taxes on their slaves' freedom and charged fees for the privilege of speaking to him. Most outrageously, Caligula declared war on Neptune, god of the sea, and ordered soldiers to collect seashells as spoils of war. He then imposed taxes on these shells, creating a completely artificial revenue source. Citizens were required to purchase and display these shells as proof of their loyalty and tax compliance. This absurd system collapsed when Caligula was assassinated, but it demonstrates how tax policy can become a tool of tyranny when unchecked by institutional constraints. The episode illustrates the importance of reasonable limits on governmental taxation power and the dangers of allowing personal whims to drive fiscal policy. During the Great Depression, tax evasion became widespread as people struggled to survive economic hardship. However, one case stood out for its sheer creativity. A group of Chicago businessmen created an elaborate scheme involving fake charities and religious organizations to avoid paying income taxes on their substantial earnings. These individuals established multiple shell organizations that claimed to provide services to the poor and homeless. They would donate money to these fake charities, claim massive tax deductions, and then have the organizations pay the money back through consulting fees and administrative costs. The scheme involved forged documents, bribed officials, and even fake religious ceremonies to maintain the illusion of legitimacy. Federal investigators spent 3 years unraveling this complex fraud, ultimately charging 17 individuals with conspiracy and tax evasion. The case led to stricter oversight of charitable organizations and established important precedents about tax-exempt status requirements. It showed how economic desperation could drive otherwise respectable citizens to elaborate criminal schemes. Perhaps the most internationally significant tax scandal involved the Panama Papers revelations in 2016. This massive leak exposed how world leaders, celebrities, and wealthy individuals used offshore companies to avoid paying taxes in their home countries. While not historical in the traditional sense, this scandal revealed tax avoidance strategies that had been developing for decades. The papers showed how complex international financial structures could be used to hide wealth and minimize tax obligations legally and illegally. Several government officials resigned, and multiple countries launched investigations into their citizens' offshore activities. The revelations sparked global discussions about tax fairness and international cooperation in preventing tax avoidance. These 10 tax adventures reveal a fascinating pattern throughout history. From ancient Rome to modern times, tax policy has been a source of conflict, corruption, and social change. The powerful have always sought ways to minimize their obligations, while governments have struggled to collect revenue fairly and efficiently. What makes these stories truly compelling is how they demonstrate the intersection of personal ambition, political power, and economic necessity. Tax scandals often expose deeper issues about justice, representation, and governmental accountability. They show us that behind every tax code lies a complex web of human motivations, societal values, and historical circumstances. The next time you're preparing your tax return, remember these incredible stories. You're participating in a system that has toppled empires, sparked revolutions, and brought down some of history's most powerful figures. The relationship between citizens and their governments, mediated through taxation, remains one of the most fundamental aspects of organized society. Understanding these historical tax adventures gives us valuable perspective on contemporary debates about fairness, compliance, and governmental responsibility. They remind us that taxes are never just about money. They're about power, justice, and the social contract that binds communities together.